Hello, everybody. Welcome back to a special episode of the Loan Officer Marketing Podcast. I'm your host, Chris Johnstone. Today, we have Tony Umholtz on the show again. Tony, thank you again for being on the show.
Yeah, it's good to be here, Chris. Good to see you.
Good to see you too. So we are in an interesting market and a great time for today's podcast. So what are you seeing in the market right now? What are you excited about?
So I'm going to share some positives, and then I'll also share some things that have been challenging.
All right.
But there is, I'll tell you what, interest rates have come down, as all of us know, and typically, at least what we saw last year, the rates came down prior to the Fed cutting, right? So we saw the anticipation of the Fed cutting caused rates to come down. And of course, we got some labor market data that wasn't quite as rosy as we all thought it would be. And that triggered those rate declines. So I think it spurred a little bit more demand, especially for refinances. I hadn't had many refinances in my pipeline. We have quite a few now, several anyway. So I think that's a positive for industry. People got a little got a little slow for us
Yep.
in August, but we're seeing a pickup now. I mean, I feel like there's a pickup, and I feel like the industry is picking up a little bit. I think everyone's kind of coming back in, and I think the next 12 months could be pretty good. I really do, unless we see inflation raise its
Yeah.
ugly head, But as long as we keep inflation under control, I think we'll be all right.
Yep, I could not agree more. And so, are you taking a proactive approach to database management, getting ready for refi season, and kind of parsing the database out by interest rate, or is it just general messaging? How are you approaching what you think is coming in the market?
So it's a great question, and I'll tell you what we've dealt with just on a personal level in my team and in my company. We've had a challenge. We kind of had a couple products that were taken from us midstream with no notice.
Oh wow.
And these programs, we all read the book, who moved the cheese, right? So for some reason this year, that those particular products were very popular. It was high earners that didn't own a home yet, right? And those were people who were buying, and we were very much catering to them. We're going to get the product back probably at the very end of the fourth quarter, but we had so many commitments out there, so it's really hurt our business in the short run. We
Mhm.
wouldn't see we actually be up on our business if we didn't lose that product, but it caused an immediate pivot. So maybe this will kind of resonate with someone out there that we had to pivot quickly. And one thing we did is database management. The first thing I did is I wrote a letter to my database. I
Huh.
wrote a personal letter, and I sent out to over 4,000 people that we've done loans for over the last 20 years. And we got some responses from that. The other thing is we scrubbed our database for people who, and I personalized this. It wasn't AI driven, Chris. This wasn't something I did with AI. I wrote the letter myself, and we went ahead and sent it out. Um, Now, as far as refis, we did scrub our list for loan rates above 7% that we originated primarily in 2023 and some in 2024. And we found those, and we've been contacting those, and we already have some success with that. Obviously, some people want to kind of wait and see what happens. I would just encourage your audience that I learned a big lesson last year, and I think a lot of my clients did. We saw rates dip last August. The 10-year actually got to 366 one day in August of 24.
Wow.
And we had people ready to refi that were at 7.5 that could have gotten like 5.5. And they said, oh, rates are going to go lower. Well, we had to wait all the way till this year. They paid that higher rate. And guess what? Rates have already moved up a little bit after the Fed cut.
Yep.
So my advice is if people are in the money, I would take it. We just don't know. There's so much uncertainty. Uh, my gut feel is over time they'll go edge down lower, but with the federal deficit, with inflation, we don't know for sure.
Yep.
So that would be my advice. It's what I'm telling my team. If it benefits someone, they're going to be there for a while. Take advantage of the refinance. We don't have prepayment penalties in most of our products, so we can come back. We can refinance again if it makes financial sense, right? Be
Yep.
a good steward of your client's finances. So, but to answer your question, yes, I definitely been doing a lot of database management. That's where we're driving a lot of our business right now.
That's fantastic. And I love the be a good steward of your database. It's not about the commission that you generate today, it's the relationship that you build for the life. I feel,
That's right.
sometimes saying no is a more profitable answer than taking the actual deal because of the referrals that you can generate from that if you're on your referral scripting and all the stories that get told about how well people are taken care of when they do business with you and other loan officers that really take that approach. So that's a fantastic way to approach the business. It's refreshing. Um, Tony, what about your realtor relationships? Are you having conversations with realtors about potentially reaching out to their database, or how are you approaching the referral aspect of the business right now?
I have not asked realtors we work with to approach their database. It's a good idea. Might be something we should be doing, implementing. I've mainly just been staying in touch with them. We're still getting a steady stream of realtor referrals, and we can't handle all of them. We handle the ones we can handle. What I mean by that is some of them don't qualify, some may not fit our products, but we just try to screen them and communicate the best we can. And I had a successful closing Friday on a larger loan. It was my first referral from this realtor. We had worked together about a year ago, and she wanted to get us another deal, and it was a large one. It was almost $3 million loan, and I just made sure everything went well. I obviously called her before closing to tell her everything was on track, and then I followed up with a thank you, sincere thank you. And um, I'm not the best realtor marketer. I'm not going to do corny stuff on Instagram. I'm not going to be that guy. I'm just not me. And some people like that, but I try to be very professional and I try to help them. And like I said before on this call, I've been a business person, right? Not just a mortgage person. I've, uh, dealt with other types of businesses, and you just try to help them with the best advice you can. But I need to grow that. There's realtors that I'm doing business with now that they're on the listing side, and I plan to call them and tell them, and try to earn business from them. Give us a shot. But I probably should implement more of your ideas, Chris. I'm more of a straightforward guy. I don't.
Well, whatever, it's obviously working for you, so don't change too much because you've got it
Well,
dialed
yeah.
in.
I try to just, you try to you build relationships with people, try to do things you like to do and add value, right? If you add value and you give them, you know, you tell them the truth, tell everyone the truth all the
Yep.
time, you're going to win in the long run, you
Yep.
know.
I could not
And
agree
for
more.
me at this stage of my career, I really want to work with people who are more aligned with my team and how we work and how we treat our clients.
Yep.
I want to work with people with the same type of mindset and integrity. It's so that's important. It's got to be a good fit, both sides.
Yes, 100%. And Tony, and feel free to pass on this question, but this is a more of a personal question for me, really, which is why I'm glad I get to do the podcast because I get to connect with incredible friends like you. You've been very successful in your career, and you've got business outside of the mortgage business. I feel like you've parlayed all of your success into a healthy life. Like you're a proud, strong father. You've got an incredible business. You've got other businesses that are great. I'm wondering more about your personal philosophy on how you approach just your daily routines and your success habits. Like, could you share with me kind of like your top philosophies on life and what you think has made you successful over the years? Oh, I'm sorry, I lost your audio. Is that my audio that went out? Oh,
Chris, can
Tony.
you hear me?
Oh, yeah, there you go. Okay, you're back.
Okay. I said I was just kidding. I was giving you a hard time. I said that is a great question, and I'm glad you don't prep people for stuff. You just throw out the questions. I like that about you.
Thank you.
So it really is a good question, I have three kids, 17, 15, and 7,
Wow.
and I look at them as, they need me, right? They need me. I will tell you the beauty of our business is we have flexibility.
Yeah.
Yes, we work hard. We're going to work hard. You're going to work more than 40 hours.
Yeah.
But if you surround yourself with the right people, meaning your team, you can have balance and you can be at their functions. You can be there to take, I told you my son plays competitive golf, and I have to leave on Fridays a lot and do work from the car, do work from the hotel when we're traveling. And it gives you the flexibility to do that. Our business does. I will say this, I'll confess that there's some times where I look at our industry and I say, maybe there's something that's more mentally rewarding for me, that more of I have done outside things where I can strategize more, do some more planning. It's not as redundant, right? You're doing the same activities. I mean, this industry really, that to be successful, you have to do the same things consistently,
Yep.
and that does kind of push you the other way a little bit and frustrate you. But I would say family is so important to me, in that the flexibility our industry gives me makes me find this very rewarding, right? I
Yeah.
really enjoy it. The other aspect, philosophy, is I enjoy helping people. I enjoy relationships. I enjoy people. I'm analytical, but I enjoy people. And that fact, I enjoy having these conversations. I enjoy the time with clients, planning ahead, building our business, helping my team. I enjoy it.
Yeah.
So this is why I'm doing what we're doing. So my philosophy on life is, if have knowledge of something, pay it forward, right? So
Yeah.
you pay it forward to people. There's a lot of times where I'll do it in business, but lately I've been doing a little bit with my past career in football. There's been a few young kids who've said, "Hey, I want to kick for my high school team, or I think I have potential," and I want to go out. I go out to the field. I'll help them. I'll show them a few things,
Hmm.
and it's just fun to do that, right? If you have knowledge of something, pay it forward.
Yeah.
So I think that would be my philosophy. I think family, your friendships, your relationships, and helping others is the core of why I do what I
Yeah.
do, Chris. So, and I will say this: you do these things, and there are financial rewards too
Yeah.
that come with it. But put those first, and the others will come.
Yeah. Absolutely. Do the right thing, treat people right.
Yes,
The rest comes. What a phenomenal
yes,
answer. That's amazing. And we're getting I shouldn't say a lot of, but there's interest in our industry coming back. People joining the business. I get to talk to a lot of loan officers that have found the show, that are 6 months into the business, 9 months into the business. With it in that first 2 year grind where like the database
yeah,
hasn't really kicked in yet. And
right.
so, being in the position that you're in today, what would you say to a newer incumbent to our industry that's joining? Like, how do they really get their feet underneath them and be successful?
Well, I think there's more opportunity than ever for young people to get into this business.
Yeah.
I found, just with us losing our program, which I, look, people make decisions, companies make decisions. Sometimes they don't always know what the trickle down effect will be. Um, so I'm not going to badmouth that, but it put us in a tough spot where we had people that were dependent on us, and we had to try to pivot quickly and help them with another product, or refer them to someone who had that product in the interim. But I found myself going back to the basics. Hey,
Huh.
I'm calling realtor. Now, granted, I'm not new, so these are people I've known or know of me, but we're not doing business currently.
Right.
So even at this level, I'm still calling people. I'm still reaching out. You're still doing the same activities that I did 22 years ago, right?
Yeah.
20, almost 23 years ago. I would say it's one of the greatest times, though, for younger originators, because there's not a lot of young originators I find that are good in the industry. There's some, but there's not a lot. But there's a lot of good realtors who are young.
Yeah.
I feel like a lot of the lenders are aging out. Like, I almost feel like I'm still fairly young, and I'm not young anymore, right? So I would just say that there's a lot of good opportunity. Don't be shy. Go after the business. If you can get yourself 10 to 20 consistent realtors to partner with, you'll have a lot of fun, and you'll be busy. You'll do really well. And then you can build other phases of the business, other referral sources. I talked to you on the last call about financial planners,
Yeah.
CPAs, other types of business referral sources outside of the realtors. But the realtors are the quickest and the best. So go there first, and then you'll build your database. You'll get referrals from your database. And then the other thing you should call is, I have one member of my team who's outstanding with this. His name is Aaron, and we do what's called current client referrals, and he's one
Ah,
of the best. He calls our clients and says, if you have anyone else that your friends or family, please refer them to us. I'm telling you, you get at least one or two a month from that,
yep.
and that's just from him making that comment. And I'll do it sometimes, but I'm not as good as him. But like if you do that, I'm telling you, even at your just starting out, you'll build your pipeline pretty quick. It's one of those businesses where, like in hindsight, I look back, I would have been very good in wealth management or insurance business. I think that would have been a good fit for me. I enjoy that stuff too, being financially minded. But it takes time to build that business,
Yeah.
right? At this level now, yeah, it would have been fine, it'd been great. But like mortgage business, within 3 years, I will tell you this, like within 3 years, I made more than my NFL contract.
That's amazing.
So now back then, I didn't make as much. We didn't get paid as much as we do today. The
Mm,
guys do today, but in the NFL. But like I'm just saying, at that time, I did right. I went from 200,000 to 500,000 right in 3 years. So you can do it in this industry, and you can do it quickly versus some other financial industries, right? So it takes a long time for an executive or to get to that level. I work with executives a lot, and I see guys that have been 25, 30 years that don't do that, right? And they're they're salaried, they built their career, it's still a great career, but you can be, by doing the effort, you can get there quicker in
yep.
this industry. Real estate, mortgage banking, commercial real estate, you can.
Yeah. I always say in the mortgage business, it's a ladder, but the number of rungs are optional. You can get to
Yeah,
the top pretty quick.
you can very quickly.
Yeah.
My third year in the business, I think I was 27 or 28. I was the second top producer in the country at a non-bank lender
Wow.
in just 3 years. So so it just gives you an idea. And candidly, the first 2 years, I had my foot in and out of the mortgage business because I still was getting phone calls to work out for teams. I still
Right.
had NFL teams working me out because I just came out of the league. So like you look at you can do it. That's my encouragement to your young listeners, is that it's a business that you can do well and quickly.
Yeah. And in your start and that ramp, was a lot of that realtor relationships?
It was. Now, granted, I will say I did come out, remember, 2002, fall of 2002, I just started. 2003, 2004, 2005 was when I really, and I did do well in '04, but 2005 is when I really had that big year. It was a big year for real estate,
Mm-hmm.
but I did have a lot of realtors. I actually had some builders too.
Yeah.
Candidly, I had a couple builders that we did end loans for and construction loans for, and that helped the business. And then I just got referrals from my sphere of influence, just friends, family, people I knew. It was kind of all of that. But I didn't have a system. It was really me and a part-time assistant. It was like I worked 9 to 9. That was my schedule
That's
back then.
amazing.
So yeah,
Okay, folks,
yeah,
if you're listening to this, it doesn't matter if you're new, it doesn't matter if
long
you're
time ago.
like just gold, Tony. That's
Yeah.
fantastic. Thank you so much for
So,
sharing.
but hey, that was 20 plus 20 years ago. It was a while ago. So a little different times now.
Yeah, yep, absolutely. But I think good times coming, and for those
Yeah,
that are
I
willing to
do
put in
too.
the work, I mean the market matters, but it doesn't matter as much as the plan and the effort that you're going to put into it, because there's more than enough
Agreed.
opportunity out there for everybody.
Agreed.
That's so
Yep. 100% agreed. We had a really good year in 2023. My team did. And I thought in 22, we had our best year ever.
wow.
22 was still a very good year, but 22 was our best year ever. 23 was still good. And that was a bad year when you look at the mortgage business, but we had a good year. And, I'm still fighting to beat that 23 this year. I don't, we're going to try. I'm going to stay optimistic, but because we still have a whole quarter left, but it's going to be a fight, So,
Yeah.
uh, but I'm telling you, I know it's going to be, there's a lot of opportunity, and you just have to keep working hard and keep the effort in, and it'll pay off. You have to be smart too. You have to uh, be persistent and smart.
Yep. I could not agree more. Well, Tony, I think that is a great place stop the knowledge and the share with the listeners. But before we do, how do people get more information about you? Where do people go to learn more about you?
Well, I'm on LinkedIn, so I am on LinkedIn. You can always with me there. I do some posts. I'll tell you this, I'm not good with social media. I need to get better.
Mm,
I will get better eventually. It's probably to my detriment. My email address, I don't have my own DBA website, but I do have a company sponsored website and, email. It's a good way to get me. But yeah, I'm happy to connect via LinkedIn, and that's how probably the best way to find me.
that's fantastic. Well, again, thank you for being so generous with your time and your knowledge on the show. It's fantastic to have you back, and thanks so much for sharing. And I think you're going to crush your goal this year. So I think you're going to get it.
Well, thank you. Thanks for the encouragement. I've got to go run through a wall now.
Yeah, well, you don't need it, but thank you again for being on
All
the
right.
show.